What's the transition that you think Nvidia has to and can make to maintain and grow this $3 trillion market cap to 4?
Well, I think that they're the closest thing to nailing it in AI so far, obviously, by creating an ecosystem that developers love, and they know they can be relied upon to grow. And that's a really big thing. We are in a paradigm shift, and this is the Microsoft and Apple of those past regimes all combined into one in Nvidia, and that's what you really have to think about and really just starting. So they may have the most runway of all the big ones, but what they need to do is transition more to software, which we're going to see. And also, I think what's really cool, and we wrote about this today, is they could generate over $270 billion in cash over the next 3 years. And nobody talks about that. That's something that can come back to shareholders and really keep the multiple pretty high for a long time. NVIDIA is doing something amazing here. They are creating AI factories, which is really code for software factories. And their output is software. It's applications. It's stuff that we take for granted today in a different form. And NVIDIA end goal is to create software on the fly. That's their product that they're going to create with these AI factories. And that's just a ton of value, John.
With Nvidia already formulating itself as a monopoly in the hardware component of the AI sector, its shifted focus into the software side furthers its growth potential beyond what is priced in with the upcoming Blackwell GPUs. With over 90% of analysts maintaining Nvidia at a buy rating despite its growth over the last year, a general consensus across market professionals is that Nvidia still has unrealized potential that can provide massive growth in the future. This analyst makes some key points about Nvidia's position in the AI industry. A key one being that the AI revolution may produce fewer megacaps than previous tech revolutions, with Nvidia being at the forefront. With fewer AI megacaps, this means less competition for Nvidia and thus more growth in the company. On top of this, if Nvidia can manage to make software on the fly a reality through their AI factories, this would only mean massive growth for Nvidia and the AI sector as a whole. This analyst projects that Nvidia will rise to a $4 trillion market cap and beyond, meaning a 30% price increase from current levels, which would make the stock worth about $170 post-split. In today's video, we will explore how possible this rise truly is, as well as whether it would be a good idea for investors to purchase the stock at its current valuations. If you'd like to be one of the first to hear about all of Nvidia's latest news and updates, be sure to subscribe to the channel. Let's get on with the video.
You mentioned all the players in the space, Patrick, and it makes me think about the competition of it all. I'm curious if you can talk about the biggest risk to Nvidia when it comes to pricing power on its chips, and just give us some context on, the pricing of Nvidia's chips versus some of their competitors.
Yeah, some of the earlier data center chips that NVIDIA had, they might sell for $5,000, $10,000 a piece, but now we're looking at $30,000 to $40,000 per chip, and that is astronomical. It's probably over 1,000% gross margin. But the longevity here, so you've got two levels of competition. First, you have the merchant silicon providers, the AMDs and the Intels of the world. And then you have the homegrown ones from AWS, from Azure, and from Google. And what it is a race right now is NVIDIA is trying to get a lock-in through their software. I do believe that chip makers and AMD in particular have come up and have as competitive or almost as competitive chips for training. 100% there are competitive chips for inference, but it's that software lock-in that's referred to as CUDA or NVIDIA NIMs that NVIDIA is trying to stick. So regardless of who has the better chip, you have to go with NVIDIA because of its software.
Regarding Nvidia's position in the AI market, this analyst highlights its dominance compared to competitors like AMD and Intel. While AMD has made strides, Nvidia's anticipated AI revenue is expected to dwarf its competitors, meaning that as long as demand for AI technology continues upwards, Nvidia will continue to enjoy high earnings growth and subsequently will grow faster than its competitors given its market share. Two key points that point towards Nvidia's growth in the short and long term: extremely high profit margins from their chips, and the lack of competition due to the need for customers to purchase Nvidia chips to be able to utilize Nvidia's software. Unless AMD and other competitors can develop software as intuitive and powerful as Nvidia's, it seems that no matter what, Nvidia will be the #1 choice when it comes to AI workloads. Even if Nvidia's competitors were to develop such software, this would take multiple years, meaning that Nvidia will have the edge for very long periods of time. Moorhead, a very respectable semiconductor analyst, remains bullish on the growth prospects of Nvidia and is yet another analyst who believes Nvidia could blast past a $4 trillion market cap. He was asked to compare Nvidia with Cisco, which showed similar growth to Nvidia before it crashed during the dot-com bubble, where he dismissed any comparison and emphasized Nvidia's ability to leverage its technological innovations and strategic partnerships to maintain a robust growth trajectory in the evolving AI and semiconductor industries. Let's see what other analysts have to say on this topic.
The trajectory they've been on, the product cycles that they have, they're launching a brand new cycle and end of this year. They'll have all of next year to sell it at higher ASPs, higher content, and frankly, even higher demand, like the demand showing no signs of slowing at this point.
Yeah, and Jensen has said we're going to see a lot of Blackwell revenues this year. Stacey, I'm wondering how you think about how much share of the market of the AI spend for chips, et cetera, is going to NVIDIA versus competitors. What we've seen in AMD in the past month or so is a real drop-off, and I'm wondering where you see that sort of rivalry, if you could even call it that at this point.
Frankly, the most relevant second source, it's probably not even the other merchant suppliers like AMD and Intel. It's folks like Broadcom, who are making chips for the hyperscalers, who are, by and large, doing their own chips, at least for their own internal workloads. And like Broadcom, their AI revenue guide for this year is like 11 billion or more. And I bet of that 11 billion, 7 or 8 of it is probably like what they call ASICs, but these custom chips that they're making for Google and Meta and that sort of thing. AMD, they've said, quote unquote, more than $4 billion. I suspect investor expectations are closer to 5 to 6, which I don't want to knock AMD too much. It was 0 a year ago, so even 0 to 4 over a year is a lot. Intel said they'll do 500 million in the back half. It's a drop in the bucket. I mean, Nvidia is probably going to do $100 billion, though. You can kind of see where the dollars are flowing. But that's sort of a breakdown of where share is today. Nvidia's still got the lion's share. They'll probably keep it.
In the AI chip market, Nvidia's dominance is clear, with projected revenues far outpacing those of competitors. While Broadcom, AMD, and Intel are also in the AI chip space, their expected revenues are much lower. Broadcom's AI revenue guide for this year is over $11 billion, with custom chips for companies like Google comprising a significant portion. AMD's AI revenue is expected to be $4 billion, and Intel's is projected to be $500 million. In contrast, Nvidia is likely to achieve around $100 billion in AI-related revenue, underscoring its leading position in the industry. Rasgon is not worried about the company's current PE, which is about 40 times earnings, and explains that it is justified by Nvidia's product cycles and strong demand. Their demand is so strong, in fact, that Nvidia has been struggling to produce enough chips to satisfy all of their customers. With Blackwell coming out this year, it seems clear that Nvidia will enjoy high sales and high demand throughout the next fiscal year. In conclusion, for today's video, it seems that most analysts believe in the growth of Nvidia and are largely bullish on the stock despite its high valuations. What do you think? Is Nvidia a buy at the current levels? Let me know in the comments. With that, thank you so much for watching. If you'd like to hear more about Nvidia's latest news, be sure to subscribe to the channel. Have a great rest of your day.